Welcome to another episode of Own It with Samina. Today, my guest is Faisal Khan from Mortgage Affiliates. I have known Faisal for over 20 years. In the real estate industry, we've worked together for hundreds of clients. And what makes our combination unique is we understand the clientele that we serve from the South Asian community, what their mindset is, versus even guiding them to how it works in the USA for real estate. Faisal is an expert in holding their hands, guiding them through the process, and he also speaks the language, so there's a great connect with the clientele. The other thing that makes him unique is he's a broker, and so what products a lot of the direct banks cannot cater to, he is an expert at it. And would love for you to listen to this episode and learn about the different loan programs that he can offer and cater to my clientele. Faisal, thank you for coming to my podcast as a
Absolutely.
guest.
Thank you so
It's a
much.
pleasure to have you.
It's a pleasure for me.
And Faisal, how long have we known each other? Like almost 20 years?
Almost 20 years. Yeah,
It's been a long
going on
time.
for a long time.
It's a long journey that I've
Yeah,
had in real estate with you.
exactly. Yeah, exactly.
And it's been a great journey.
Same here. Yeah, I had a pleasure working with you all this time, and with all the challenges we face together, it's been
Yeah.
awesome.
Yeah, and it's nice to have challenges that we
Yeah.
can overcome together as a team.
Otherwise, boring.
Yes, yes.
Yeah,
Faisal, I think what makes us both work well together is that we come from the same part of the world,
that's true. Yeah,
and you being in finance,
yeah,
you knowing how it works in the US, but also knowing the mindset of the clients
yes,
that are coming from other countries, the culture, knowing the
that's
culture,
true.
knowing the mindset.
Yeah,
I think you have a good knack to make them understand on how it is different
yes,
from their part of the world
correct.
versus how it works in the US.
How to relate to them and
Yeah.
explain them how things
Yeah.
are different from other parts of the world to
Yeah.
US. Definitely, that helps.
Faisal, let's tell our audience how you got into the mortgage industry
Okay.
and what makes you unique, that we work together and we work with a lot of different clientele,
Yeah.
and how we cater to different clientele with the different products that you have. Let's start with that. Let's start with your how you got into the mortgage business.
As my background, I came as a physician to US back in
Yeah.
2001 and wanted to go back to medicine, but then my life changed. I got married and I had kids, and then somebody told me, why don't you, while you're studying, why don't you start working as a loan officer in a bank? And I started working as a loan officer in 2004. 2 years later, I was a branch manager because they liked what I did, and I had good relationship building with people and realtors as my background in talking to patients. Everybody was very happy with my performance. So 2006, working with a bank as a bank manager, they had limited products. The rates were very high, not very competitive. So in 2008, I decided to start my own brokerage. And as a mortgage broker, you have access to, right now, I have more than 50 plus lenders in the country. We have every program available. So that helps our clients have more access to programs with the lowest rates. And I tell my realtors and my clients, if I cannot do your loan, nobody can.
And I can vouch for that because there's so many times that I was working with one lender and they couldn't upkeep with what they promised to the
Yeah.
client,
Yeah.
and turned them around, sent them to
Yeah.
you, and you closed it within few weeks.
Yeah.
So you're my go-to person when things don't
I
work out.
appreciate, and I like the, yeah, and I like the most thing with you is working with you. Like, you always send them right away so that they know what they need to do before they go out with you and start looking at homes. That way, that makes your job more. You can advise them much better in that sense.
And that's a nice introduction to our next topic, is first time home buyers.
Yes.
When it comes to first time home buyers, the initial consultation when we have more than usually that we find that, oh, we'll find the home, then we'll talk to the lender.
Exactly.
But you and I have a different strategy to that.
Correct.
And that is that no, they need to first talk to you and understand where they are in terms of their finances, because you live in the payment, not in the price.
Correct. Yeah.
And it's interesting that when these first time buyers, when they go to rent properties, they're looking at the monthly payment then,
Yeah.
but then when they go to buy a house, they're looking at the price,
Exactly.
but not knowing that what payment that price is going to give them.
Exactly.
And that's where you come into the picture.
Exactly.
And how do you make them understand? Can you go through like a brief process
Yeah,
of
so first time buyers definitely they have a lot of questions which I encourage them to ask. I know you do your consultation, and so when they come to us, we basically get to know them, their income, their credit, and their down payment, because those are the three things which every lender needs to know, those three things. So when I sit down with my clients, I talk to them like, okay, how much money have you saved to buy a house? And they're like, we never thought about saving money to buy a house. Somebody told us just go buy a house. I said, okay, we can help you with that, because there are a lot of ways you can gather money to buy a house. Doesn't mean that if you don't have any money, you cannot buy a house. Then we ask them about their credit, and they will tell us what their credit is, and then we can figure out which program would be the one which will fit their credit profile. And
or
then,
if they have challenges with their credit,
exactly,
then
if they have,
then you help them with that
exactly,
as
if they
well.
have credit challenges, then we have a company, and it doesn't cost you any money, but we can help them get their scores up, so their credit can be fixed within a matter of weeks, not even months. That's why when we talk to them, we'll tell them, and we'll do our consultation as well. That's part of the process. And then lastly, about the income, and that's where the most challenging part, as you experience in last 20 years, people, a lot of loans fall out because of debt to income ratio, and that's where the income comes in. How to calculate income correctly upfront for every buyer. So first of all, you know their limits, but the buyer also needs to know and have to understand that, okay, I'm comfortable, I know my limits, now I can go out, and if I find a house in this limit, I will go to settlement. I will not be discouraged later in the game. A lot of people have this bad experiences that, okay, the lender told us something up front, but now they say they cannot do it because whatever reason. So yes, those three things. Then I look at my clients, when you sit down with them, and they get an idea how much they can afford and how much they should afford. Because a lot of people, as you said, they live in the payment. So what is a good payment? Because if you're living in a lot of people come to us, my rent is 1,800. I asked them, okay, how big is the house? He said, oh, it's a one bedroom house. I said, okay, and how much is that next house? He said, it's 4 bedroom house. So how can you live an $1,800 payment in a 4 bedroom house? So we give him this perspective that, listen, if you're living in a 2 bedroom house, now you're going to a townhouse or single family, payment is going to increase, but it's also giving you more for your money. So that's how we sit down and give them this idea, and that definitely they definitely appreciate that, because then they get their numbers together.
Also, they get to know how much they can leverage with the money that they have when we are negotiating, because sometimes, say if we write 300 on a 350 house
Yeah,
and we have to go up in price, how much can they go up in price? Or
exactly.
if they are competing with
Yes,
other offers,
correct.
multiple offers on a
Yes,
house, and if they're competing with other buyers, how much can they leverage?
yes,
What is their limit?
exactly,
That is something that you, me, and the buyer needs to know,
exactly, exactly.
because you can only go so far. Everybody has their own threshold.
Everybody have their limits, yes, and
Yeah.
they need to know the limit now before they go out and look at a house and even try to make an offer. Because if you make an, as you said, if you make an offer on a house you like, but then you find out, oh, I cannot even go that much,
Yeah.
or maybe I did not offer enough, I would have got this house because I didn't go up, and I could have done it. Because if they don't sit down with us, they don't know exactly how they can leverage their income, their credit score, their down payment, and whatever their financial situation is to get their dream house.
Right. I get asked this question all the time. Can you get us this house? And if they're competing, I just tell them that, look, don't get married to the house yet.
Yeah,
Once you have settled on the house, then you're
Yeah,
married to the house.
exactly.
But till then, see what you can do to best get the house. You have a threshold, and I'll never get you out of your comfort zone, because then
Yeah,
it's there will be problems tomorrow. The
exactly.
loan will not go through or
Yeah.
anything. So why even get beyond what their limit is?
Exactly. And as you said, you don't get married to the mortgage because you buy the house because you want to live there, raise your family, send your kids to school, you enjoy the
Yes.
neighborhood. Mortgage is something it can change.
Yeah.
After 6 months, after 1 year, after 2 years, you never tied to the mortgage. I have never seen anybody who actually kept that mortgage for 30 years. Everybody I talk to after even average is 7 years. Mortgage changes, the rate changes, program changes, either they move out. So again, you find out your payment. If you really love that house, we can tell you how you can get that house. What has to happen on your lending side to
Right.
get.
And that's a great question, Faisal. Like right there, that I have a lot of buyers who are like, I want to buy, but the interest rates are high.
Yeah,
What they don't understand, that the price of the house is also going up.
yeah,
So by the time the interest rate even adjusts to what they want,
yeah.
the price has shifted to another
Oh,
range.
exactly.
So how would you guide a client like that, who's waiting for the right time as far as the interest rates are
So
concerned?
it's exactly, we get the same question all the time. We should buy now or should we wait? I tell them, listen, do you invest money in your 401k? Do you wait till the market goes down? You don't.
No.
You invest your money in your 401k or your retirement
Right.
account every month on a certain number.
Right.
Same thing is the interest rate. Mortgage interest rate is a number on your statement.
Right.
It's not coming out of your pocket every month. What's
Right.
coming out of your pocket is the dollars.
Right.
If you can afford the house with your income in dollars, just go buy that house. And when the time comes, you can refinance and lower the rate. When I bought my first house 20 years ago, the rates were the same as they are now, around 6.5%. And everybody who got a
Exactly.
6.5%, they were happy. Oh, I got 6.5. Everybody's getting 9%.
Yeah, between 6 and 8, I've seen that the last 30-year average has been between 6 and 8.
Yeah.
And I think what happened, like during COVID time, that short period of time when rates went to the threes and the fives, I don't think we're going to see it anytime
That
soon.
was a one-time lifetime event. 100 years, in every 100 years there's a pandemic, and those were pandemic rates. Nobody gonna see them again. And if you're gonna wait for that 3.5, you never become a homeowner.
Never. Yeah.
But the rates are anticipated to come down as the government make new policies. They might come down to below 6, 5.5. But that will be, as you said, 2 years from now. The rates
Yeah.
of the house price is gonna be more than 5%
Yeah.
higher.
And you can always
You can
refinance.
always refinance. So again, I tell all my clients, as you do, that it's not the rate you are buying a house. Mortgage is something that helps you buy the house. You can pay it off whenever you like, or you can manage the payment with the programs we have.
Yeah, look at the different programs, what price
Exactly.
they're giving, each program is
Yeah.
offering as far as the monthly payment, and choose the one program that favors the monthly payment that you want.
Exactly. Yeah.
Yeah, and you can always refinance.
Yeah, you can, as you said, there is no limit on refinance. You can refinance like back in the day. Excuse me. When the COVID times, the rates were down. We were refinancing people every 6 months
Yeah,
because 6 months the rates come down.
the rates kept changing.
Yeah.
Yeah, let's talk about
Excuse me.
the current market right now, Faisal.
Yeah.
Let's talk about the current market. See, what I'm seeing right now in the market is that I have buyers who are in the 900 to a million price range. But then again, the houses that they are liking are really starting off at the 1.1, 1.2 price range. So there's a small gap which we are trying to fill, but it's not happening because they're stuck at their affordability. How do we close the gap? What I was thinking was we do renovation loans.
Okay. Yeah.
Let's talk about renovation loans, because what I'm thinking is that we tell our clients that, look, the house that the look that you want in your house, the space that you want, you're not get and the location that you want.
Yeah.
They want a certain location for their kids with the school district and everything.
Yeah.
But the gap in their affordability and the market price, how to close that gap is, we tell them go down in your price. So basically buy an older house in the same area that you want, buy an older house and renovate it. And so the bank can give you the money to purchase it and renovate it. They give you both money, and then by the time the renovation is done, it comes into one mortgage payment. Am I correct?
Correct, yes. So it's definitely a renovation loan is a loan which is offered by Fannie and Freddie. They
Right.
call a home renovation loan.
Right.
Or through FHA is a
Yeah.
called 2 or 3K loan.
Yeah.
Now, as you said, buy a house in the neighborhood you want because location, you can't
Right.
change that, but you
Yeah.
can change the house.
Yeah.
So the difference in price, let's say the house you buy is 700,000, but the way you want it, it's going to cost up to 1.2. So that's $500,000 difference. Based upon the way it works is if you tell the lender that, okay, this is the house right now, but eventually when we are fixing it or renovating it, it will, the value is going to go up to 1.2. So the lenders will give you the loan based upon the future value by doing an appraisal at the property now and at the time of completion.
Yeah.
And then you don't have to spend the 500,000 right now. You will just do an appraisal, and your architect and the contractor will make a architect design, and the contractor will make a estimate of what is being done and how much it's going to cost. And appraisal company will use that information to determine the future value of the house.
Right,
And
right.
that's how a renovation loan is done.
The benefit to that is that the buyer gets to buy a house which they can renovate and update it to their liking,
Correct.
and the price also appreciates.
Yes.
I'll share a story. I had a client who bought a house. Her budget was 1.6 million,
Okay.
and she wanted a certain location and a certain style of house.
Yeah.
And when we were looking, she was not getting the style of house in the location she wanted.
Okay.
And in order to cater to her, what we did was we first found a house which needed updating in the location she wanted.
Yeah.
She bought a house for 900, so
Okay.
we went down in her budget,
Yeah.
and she needed about 450 to expand the house
Yeah.
and completely gut renovate it.
Okay.
Okay.
Yeah.
And we did an appraisal, and by the time we were done, it took 5 months to do all the work.
Yeah.
After
Yeah.
she bought the property,
Mhm.
about 5 months, and by the time she was done, she got into the house with 300,000 equity.
Wow. Nice. Yeah. Definitely. That's doable. I
So
mean, that's how it works.
she's a very happy customer
Yeah, I'm
right
sure
now.
she is.
Yeah.
Sure she is.
And she got the style of house she wanted. She got the within the budget she wanted and the location she
Yeah,
wanted.
definitely. That's definitely a win-win for everybody.
It's a win-win for today's market, I feel,
Yeah.
where people are struggling to get the style of house they want,
Yeah.
the updated house they want. They can always do that with an older house in the neighborhood they want.
Exactly. And if the house has not been renovated before, like as you said, older house, you might get a very good deal on it when
Yeah.
you buy the first time. Yeah.
Even for first-time home buyers, that's possible, right?
Yeah, first time home buyers are all. Yeah, exactly. It's possible with the first time home buyers.
First-time home buyers, move-up buyers who are
Yeah.
moving from a townhouse to a single
Yeah.
family. Even those buyers, they can do that.
Yeah,
Or
it's-
move down buyers, somebody
Who wants to
has a
downsize?
big house,
Yeah.
and now they want to downsize.
Into a
They
rancher,
can
maybe.
always buy
Yeah.
a rancher, fix it
Yeah.
up,
Fix it up the way they
and
want it.
move into that house and sell their.
So there's a lot of possibilities with all these different
So
type of buyers.
renovation loan gives us all these possibilities,
All these possibilities.
and close the gap between
Yeah.
their affordability
Correct.
and the market value.
And the future market value. Yep,
yeah,
that is correct.
that's awesome.
Yep.
Let's talk about investors, Faisal.
Okay.
Now, first of all, what are the requirements for an investor, and what are the different products?
Yeah, we get a lot of calls for people who wants to be investors or who are already an investor. There are lenders who are restricted to certain programs, but if you have never bought a house and you want to be an investor and you don't want to buy a house for yourself, we can do that too. Again, the guidelines for investor loans are a little bit more broad than for a first time buyer for a purchase for themselves. because primary home have more regulation than investor loans. So investor loans, as long as you have 10% down payment and you have at least a 660 credit score, you can buy a house to invest in, which can be used as a rental property.
That's nice to know because I was under the impression that you needed at least 20% down.
No, 10%, you can start with 10%.
That's
Definitely,
great.
yeah. The difference between 10 to 20 or more is going to be the rate in the interest rate. Yeah,
Okay.
that is the only
Okay,
difference.
so that's better interest rates.
Exactly, yeah, with the more
Okay.
down payment.
Okay. Let's talk about business owners, Faisal. That you and I,
Yeah,
we cater to a lot of people in our community
yeah,
who are business owners,
yeah,
and what they make income wise does not necessarily reflect
correct,
in their tax return.
correct.
And being a lender, when you see a tax return to qualify them,
Yeah,
what do you do when it comes to that situation? Can you cater to
sure,
business owners like
absolutely.
that?
Before I go to business owner, one thing about the investor loans, it's not only for houses which are ready to go. You can also get a loan, which you probably have a topic you want to talk about. It's called fix and flip. Investors buy and sell.
Yeah.
So they can pick up a property and you get 6 months to get the money to fix the house and sell. So that's also an investor loan.
The 2 or 3K.
Now, 2 or 3K loan is only for primary homes, not
Okay.
for investors. For investors, it's called fix and flip loan.
Okay.
So they can buy a property, fix it up, and sell it in 6 months, and the lender will give you the money to do the project. If you have a long-term investor, which you just want to rent it out, or you have an investor who just wants to buy and sell, so that's called fix and flip. Yeah, so going back to business owners, I get to see a lot of those as we come from the part of the world where a lot of people are business owners. When they come to this country, they start a
And their
business.
paperwork is so different
Yeah,
than a regular income
yes,
person who's
exactly. So that documentation is different. They're not, some of them are not very savvy with the documentation because they're getting used to these tax laws and everything, and they rely upon their accountant.
or they're very new to the country, and so
Yes,
their documentation is very premature.
exactly. And they've never filed taxes in the US before. So we come in, and when we talk to anybody like that, we look at their history and then we basically straighten everything out. We talk to their accountant. We tell their accountant that this is how the business has been ran. And I also have experience as an accountant at myself, so I can relate to the tax preparer or the accountant as well, so that I understand their language, and I can tell them how to do their taxes. That way, they are in compliance with the IRS, but also able to get a mortgage. Now, if they are not able to use that income from the tax returns, there are other programs. So don't sweat it. Oh, my tax return only shows $60,000 and I'm buying a $1 million home. How I'm going to afford it? A lot of businesses, as you said, their income does not reflect because they have a lot of expenses. So the lenders have designed a program that, okay, they just look at your bank statements. If your business have been established for at least 2 years, actually some lenders only allow 1 year. They look at the deposits in your business. That, okay, how much money you're putting into your business, not how much is coming out, how much is coming in. And that's all they look at. And they can use that as a loan program. Some lenders also offer, it's similar to a no doc loan, but it's not exactly a no doc, which no doc means no document, but it's called profit and loss statement. So if your accountant can make a profit and loss statement and show the lender that, okay, this is actual income he makes, the gross income, we can use that, not sorry, gross income, net income from the profit and loss, we can use that for those business owners. So to all your business owners, clients, don't wait to file that perfect tax return.
Yeah.
Don't wait. Let us look at it. We can tell you, like, January right now is a good time before you file your taxes. It's due in April.
Exactly
Is
how to file
how
it
to file it.
so that you are prepping yourself
Exactly.
to buy the
And
house.
you are ready to buy a house. And it's going to be done in a matter of months, like 2 months. I have clients coming to me in January and they get the keys to the house in March.
Wow.
Yeah. So as you have clients who have done, we have done this by April, by springtime, they're already moving into the new house because they were able to have the taxes looked at by us before they even filed them.
Yeah. Another situation, Faisal, is getting gifts, gift money.
Yes.
And I know that we have to be very strategic in our action on how we receive the gift.
Yeah.
Would you like to walk the audience through how to get that gift money so
Sure.
that you can use it? Because sometimes
Yeah.
one wrong step in the
Yeah,
process, you
yeah,
cannot use the money. And we've had issues like that
yeah,
when the client did not really follow through on exactly what we have said.
yeah,
So can you
exactly.
just walk us
So
through
gift
that?
money is money which you don't have in your bank account, but you can get money from your family members, and there could be any relationship. You cannot give money from your friend, but you can get from your cousin or distant relatives. You can get gift money. Um,
Parents, distant
Anybody close or
anybody.
anybody who is, and you know where we come from. There's always some sort of a connection.
Yes.
They know this person and they are related
Yeah.
somehow or the other. So we can guide them in that direction. But gift money is money which most of the people they make a mistake is they take this money and put it right away in their bank account.
Yes.
And when the lenders see any money, the guidelines require that it's in there for at least 2 months. And sometimes you don't have 2 months. So what I tell my clients, when you have gift funds, let us know right away. And we do that anyways. When we check that somebody said we have 20% down, I said, where's the money? He said, oh, I have money coming from India. I said, okay, that's fine, no problem. But we need to know who is the person sending it and when it's going to arrive in the US. So that's how we guide them. But technically, you don't give the money directly into your bank account. If you do want to get in your bank account, then we will tell you how to do it and what procedures and what documentation you're going to
Like
need.
seasoning the money.
Exactly. A lot of clients have money in their home, in their mattresses,
Yeah.
and they have thousands of dollars. They say, oh, we saved over years this money and now we cannot use it. I said, we have ways you can use it.
Yeah.
And there are guidelines which allow, because people and lenders realize that people save money over time. So we can definitely use gift money. Now, the new thing came out recently about 8, 9 months ago. You can use gift money towards investment loans.
Oh wow.
Yeah. So if you have a partner who don't want to be on the loan, but he wants to invest the money, he can give the money and you can get the loan in your name and you can become an investor. So that gift money, and that's even easier compared to primary home. It's only the primary home, the first time buyers have to be very vigilant about how to use the gift funds. So yes, gift funds is allowable and it can be used, and we have a lot of people with a lot of gift funds because people definitely have relationships where they can get gifts.
Okay. Lastly, let's talk about foreign nationals who are looking to invest in the US.
Exactly. Yeah. Yeah. As US is a big market for real estate, a lot of people come from all over the world. We have clients from China, India, South Asia, all other countries from Europe. They come in. They come in and they invest to buy for rental purposes. The loan programs for foreign nationals is very simple. You just have to show that you have legal visa to come to US, and you don't have to be a work visa. It's just a visit visa.
A tourist
A
visa is
tourist
good.
visa. You have a tourist visa. We need a copy of an unexpired tourist visa, and you need 25 or some cases 30% down payment. So if the house price is
So it's gone down because I was under the impression it was 40%. So
no,
now it's
now
gone.
is yeah 30% is if you do 30% it's very simple. If you have 25%, there's some lenders who are okay, but 30% is always the easiest. And your money, like we have clients from Canada who come in and buy all the time. So 30% down, you have a visa to come to US. The money has to be in the US. You cannot have the money overseas. It has to be in the US for at least 2 months. So if you bring the money today, you can use that money to buy a house in March. Yeah, February, March. Yeah, so end of March you can do. So that's pretty simple. You don't need any credit score. You don't need to have a job. You don't have to have nothing, and you can rent that property. You can rent it to anybody. You can use it for Airbnb,
I was
as
going
you
to just
say.
ask you
Yeah,
Airbnbs. Yeah.
yeah. So a lot of investors are Airbnb investors, and you can buy anywhere in the U.S. It doesn't have to be Maryland or anything in DC area. Anywhere in the U.S. we have this program.
Faisal, it's been a pleasure talking to you about the different types of loans and what you cater to the clientele that we have.
Yeah.
Why don't you just let's finish off with telling the audience how they can reach you if they needed to, and how we can take this to the next level if the client is ready to buy or invest.
Sure. What I tell your clients, and I would say that when you get in touch with Samina, she has all my contact information. It's very simple. We are a technology savvy company. We like everything done fast. So just reach out to us before you talk to Samina or right away after you talk to Samina. Just give us a call by email or text message or phone call, and just we'll do everything possible, give you a quick answer so that you can go out and look it up. But don't make a move without talking to us as a lender. That way, you're not wasting your time and getting.
And you're just like getting pre-approved and then starting the process.
Correct.
You're just a more confident buyer.
Yes, and importantly, like in this market, there's so many buyers, and sometimes there's only few sellers. Your offer has to be vetted out by a lender who's local lender who have done all the work upfront, so that when I talk to the listing, because the listing agents sometimes call us and they ask us questions about the pre-approval, so we do everything upfront. So that way, when you are out there putting an offer out, and if you want to do an escalation clause or appraisal waiver or anything related to the loan, we can back you up and say, yes, we have verified everything and we will make sure this closes in 30 days.
And the best part is you're a broker.
Correct.
And you have access to a lot of loan programs that a direct bank
Yes.
cannot offer.
So let's say you go to Bank of America and they say, no, we cannot do your loan. Don't think that you are done, because there's another lender out there who will be happy to do your loan with a better interest rate. So as a broker, we have access to more than 50 lenders in the country, all the programs. As I said earlier, if you cannot do your loan, nobody can.
Thank you. Thank you.
Thank you so much, Samina. It was a pleasure meeting you,
Pleasure.
always 20 years ago.
Yeah.
And it's a pleasure when I get a call from you
Yeah.
to work on a client. We get excited about it, and we're going to make sure they go to the finish line.
Thank you. Thank you
You're
for
welcome.
always
Take care.
closing the deal for me.
Absolutely.